Network Limited Q1FY22 earnings conference call hosted by Axis Capital Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ankur Periwal from Axis Capital. Thank you, and over to you, sir.
Yeah, thank you, Stanford. Good evening, friends, and welcome to Sun TV Network's Q1FY22 post-result earnings call. As usual, from the management side, we have with us Mr. R. Mahesh Kumar, Managing Director, Mr. S. L. Narayanan, Group CFO, and Mr. V.C. Unnikrishnan, CFO. Over to you, SL, for the initial remarks, or should we start with the Q&A directly?
Yeah, I'll just preface a few things.
Sure.
So that we can preempt a lot of repetitive questions. See, the most important change that's happened in the current quarter ended 30th June 2021 is a change in the estimation of the useful life of our movies. As you know, we've been amortizing it in full in the past. Now, beginning this year, we would amortize them over a useful life of 4 years, whereby 30% each will be written off in the first 2 years and 20% each in the last 2 years. So this is a very important change in the estimates used for presenting the financial statements, and as a result of which our depreciation and amortization charge is lower by 70 crores. But over time, this will normalize. It's only for the first year this will have this effect. And I must add here that this is in line with the global best practice. Almost all the media companies that have huge investments in content and which content is used over a foreseeable future adopt time periods which are comparable to what we have implemented, with an accelerated charge happening in the first half and a lower charge in the second half. So that's one. And we also had the effect of very large other income in the previous year. We had some one-time effects of about 35 crores, which is not there in the current year's other income number. So it may seem like there's an abrupt drop, because generally the rates of interest that we are getting on debt instruments, we have only investments in high-grade debt in the Sun Treasury book. Rates have been falling, but that apart, we had a one-time effect of 35 crores, which are some refunds on interest dues, which is there in the same period last year. So these are two items which need to be noted. Apart from that, we also had a truncated IPL season this time, which had an effect of about 46 crores in PBT. So with that, we can start off the Q&A.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may please press star, then 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star, then 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star, then 1. The first question is from the line of Kunal Vora from BNP Paribas. Please go ahead.
Yeah, thanks for the opportunity. First question, Sir, you mentioned about the accounting policy change. So if you can explain the rationale for doing it now, because you always followed conservative accounting writing of movies on first broadcast. Like, what's the rationale for doing it now? And is it what anything to do with creative?
Let me address this. First of all, this is not a change in accounting policy. It's only the use of the estimate. See, we've always maintained that we don't know much about the usefulness of these assets, and therefore we've been charging it off in the past, consistent with that belief. Now, we also have a lot of data to show that, almost every movie that we have, today we have some of the blockbusters acquired in the mid-90s, still generating revenue. There have been also some movies which have not produced that kind of revenue, but today we are getting enough data to support a view that this is perhaps the right way to do. In fact, if you remember, till last year we also didn't have a different treatment for the tax filings also. So now everything is got now harmonized. It so happens that we are also now comparing ourselves with almost every broadcast company, not just the Indian broadcast companies. We are comparing ourselves with global broadcast companies. Believe me, there's not a single company in the whole world which is amortizing 100% of movie rights. In fact, people amortize even their regular content, which is your shows and serials. We are applying it only to movies now. So we think that it's only in line with an accepted norm which is being adopted internationally.
Okay, sure. Okay. And secondly,
Kunal, you know more than me that businesses are valued on the strength of their cash flows. So this is just an accounting representation, and it really doesn't make any change. End of the day, it is the operating cash flow and free cash flow which drives, pricing of securities. So it really doesn't make much of a difference.
Thank you.
Hello?
We've lost the line for Mr. Kunal.
Yeah, I think you lost the line.
Participants who would like to ask questions, please press star, then 1. We take the question from the line of Kunal Vora. Please go ahead.
Yeah, sorry, my line had got dropped. So I think the first question was answered. Just secondly on advertisement, in the past you mentioned that regional retailers who are like large spenders for you, they haven't been spending much, and looks like that continues to remain the case. If you can just talk about the health of this segment as well as how the advertiser mix has changed compared to pre-pandemic levels, and like what's your expectation for this year? Earlier we were expecting to get back to a 420 level of ad revenue, but how does that change with the second wave?
So we saw some really sharp recovery in the month of April, which was more or less inconsistent with Q4 trend. But unfortunately, because of the second wave and the lockdown, there's been some impact across all the markets where we were operating. So I am saying still retail has not come back full swing, and to that extent, I think it has not reached the pre-COVID levels. Unless and otherwise, we are out of this pandemic, we are not seeing the pre-COVID level spend by especially the retail advertisers. However, from the national level, I think we are getting pretty good support. But for the retail segment to come back on a full swing basis, I think we feel that it will take time, even with the threat of this third wave. So we just need to get out of this to see the aggressive spend by the retail segment. So our view is still a little bit uncertain in terms of how things really span out. Like if we are going to get impacted by another wave of COVID, so we really don't know. But it might not be as severe as first or second, but that uncertainty still exists.
Understood. And that's helpful. Lastly, if you can just give you the revenue breakup, revenue and depreciation amortization breakup. That's the only question.
Advertisement is 244 crores. Broadcast income is 2 crores. International is 25 crores. Pay channel and digital is 201 crores. DTH is 214. IPL is 124.
Sure. And depreciation amortization?
Depreciation amortization, we have depreciation is 26 crores and amortization about 7 crores.
Great. That's it from my side. Thank you.
Thank you. Participants who would like to ask questions, please press star, then 1. The next question is from the line of Sanjesh Jain from ICICI Securities. Please go ahead.
Good evening, sir, and thanks for the opportunity. First, on the subscription revenue side, in the last call we mentioned that for this whole year FY22, we were looking at a double-digit subscription revenue. Now that first quarter has gone by and it is more or less flattish for the last 3 quarters, but a decline from a June of last year. Are we revisiting the subscription revenue guidance for the full year? That's the first question. A related question to this is that now we have some sort of decision by Bombay High Court on the NTO 2.1. What's our thought process on channel pricing and bundle packaging? Are we relooking at adopting the NTO 2, and what would be the anticipated impact of if we are looking at implementing NTO 2.0? These are my initial 2 questions.
So with reference to your second question, so I think there has been some discussions among the industry group, and the matter is still sub judice because there has been appeals pending in the Supreme Court. But whatever I can tell now, there will not be any major revenue impact in terms of the pricing, because there is a pricing which is operating at the ground and there is an MRP. So I think we will not be impacted by that particular TRAI NTO2 order. So that much we can tell now. But we have to still wait and see what happens in the Supreme Court, and then accordingly we will have to revisit the pricing. On the subscription growth, I think to a great extent the clarity will emerge only after the implementation of NTO2, whether it is going to get implemented or not. Till such time, I think we will not be able to give a very clear-cut guidance in terms of how the growth is going to emerge on the subscription front.
Got it, sir. Thank you. The second question, or the second set of question, is on the movie production business. We talked about 1,200 crores of investment over next 18 months in the previous call. What's the progress on that? And considering that the shootings were allowed, when are we going to see some of these coming up, assuming that the second half the theaters will be open, and so forth, and how many movies we are at, what stages we are, if you can give some color on the movie production business.
5 of the movies are under production now, and as of now we have announced the date of release of the Rajinikanth movie for Diwali, November 4th. But I mean, okay, theaters are still not opened up in Tamil Nadu as of now, or possibly in any of the southern states. So we'll have, and of these 5 movies, I think most of them should be ready by between September and October. So we do hope that once the Rajini movie is released, maybe subsequently we should be able to start releasing the other movies as well. That's the status as of now. Shooting is going in full swing.
Okay, so these are the 5 movies which we are looking at FY22, or we may be adding few more to this?
Actually, Sanjay, the last time, it was more an indicative number, because, we are constantly in dialogue with script writers and directors, and, projects keep coming. So, and not all movies are as expensive as a top-rated blockbuster. So, those numbers that you mentioned at 1,200 crores may not be that much, because many of the movies are also with mid-tier, star cast. So they will not average at 100 crore plus kind of ticket size. It could well be around 50 to 60 crores. Okay. So that 1,200 crore number is more indicative over the next, year and a half kind of time frame. But at this point in time, the projects that have actually been kicked off and hit the ground running are only 5 in number, which is Rajinikanth, then Vijay, Surya, Dhanush, and one more Vijay Sethupathi. That's it.
Got it. Thank you.
So I think, if I may hazard a guess, the total investment will be just about 50% of the number that we had indicated.
Okay, so basically these are 100 plus all the 5 of them.
Correct. About 600 crores would be the budget for these 5.
Until these get completed or reach their finality, we wouldn't want to start the production of some or other movies which we have signed up. So that could possibly take time, all depending on how quickly the theaters are opened up across the states.
Fair enough, sir.
But one thing that has definitely changed is there's tremendous demand for content now. We are witnessing, newer opportunities for dubbing these and releasing it in other formats as well. So the kind of revenue monetization opportunities that will emerge out of these new productions will be of a far higher order than what we've seen in the past.
And we are releasing the dub simultaneously, or it's only for the rights that we are dubbing?
No, not immediately. There will be basically Tamil productions, but what I'm saying is we are witnessing tremendous demand for all these titles.
No, theatrical releases of movies will be simultaneous. If like a Rajinikanth movie is getting dubbed into Telugu or Malayalam, it will be simultaneous theatrical release.
Yeah, we have seen that. Like KGF had a 5-language movie release simultaneously. I mean, just to understand.
Exactly.
We are trying to do similarly.
Right.
Yeah. Got it. Last bit of update on the Sun Next. Where are we in terms of originals? We did push it in the second half FY22. We still are hopeful that we will be kicking off our original production in Sun Next in the second half of FY22, or we think, considering that the COVID has hit us, we may postpone it again?
Yeah, this COVID has put a huge, spoke in the wheel. So, we need to wait and watch. We don't want to rush into it because as it is today, most of the content production is hampered because of various restrictions and protocols that have been, insisted by the local authorities. So at this point in time, we are not very clear when we'll get that thing started. As I told you in the last call itself, the focus is on the movies getting completed to start with, and then we'll kick off the plan for Sun Next.
Got it. Yeah, but actually, can you just give us a broad thesis on how do you look at Sun Next as a independent?
It's going to be a very, very key part of the overall content strategy because that is the future. We will be investing heavily in it, but at this point in time, with so many moving parts and so much of uncertainty on the COVID-related complications, I'm not able to tell you any precise number and a precise date. And hopefully the next quarter conference call, we'll have much greater clarity. I mean, if this much feared third wave doesn't happen and goes away and there is a rapid opening up of the remaining parts of the lockdown, I think, we could suddenly see a spurt in activity.
Got it. Thank you, Asal, for all the answers and best of luck for the coming quarter.
Thank you.
Thank you. Participants who would like to ask questions, please press star, then 1. The next question is from the line of Ankur Periwal from Axis Capital. Please go ahead.
Hi, sir. Sir, just continuing with the Sun Next part. So, from a number of subscribers perspective, we were around 18 odd million subs, the last you disclosed the numbers. After that, has there been any uptick there, or we are broadly on a similar run rate?
It's almost on the. Just one moment. We are currently averaging at about 23.5.
Okay. And the revenues that we'll be generating out of it are largely subscription, which will be there as a part of, our subscription revenues, or there is some advertisement-led revenues also that we are generating?
Mostly subscription, but let me caution you that out of this 23 million that we have reached, many of them are through the tie-ups with the telecom players and the OTT players other than Sun Next. So where we have some negotiated fixed fee deals, the pure play, subscribers who have come organically, that number is a very small number still. but it is growing. On that small base, it is growing. Advertisement is also starting to now pick up because a lot of people are now wanting to target, very precise psychographics and age groups. So we are seeing some uptick in advertising. We've still not disclosed the Sunnext numbers specifically on a segmented basis, but suffice it to say that these numbers are looking pretty good.
Sure. Secondly, on the content side, now, last quarter we did mention our initiatives, to boost up the market share both in Telugu and Kannada. While, this quarter may not be the right one to look at from a market share perspective, but directionally from an investments, the new show launches, etc., if you can, give some color there.
Yeah, like we had mentioned in the past, so we have a huge lineup of big ticket non-fiction shows. We had already launched the world's popular reality show called MasterChef in Tamil on 7th of August. I think the overall response has been very, very encouraging. 23rd August, we are launching KBC in Telugu with a superstar called Junior NTR. And we are also launching MasterChef in Telugu. We are launching an international format show, Are You Smarter Than the Fifth Grader in Malayalam. And we are also working with some of the format owners for launching big ticket shows in other markets, which could be Kannada, Bengali, etc. So we have a very strong lineup in the next couple of months.
Sure. Sir, from a fresh content launch perspective, Bangla, how are we looking at that market now? Or will we prefer to sort of, scale up our ratings and share in the existing four markets and then we look at Bangla?
No. I think we will be now also focusing on Bangla because we have been pretty steady and some of the fiction launches which we have done has been tracking very well now. So there has been some traction to our channel. So now we will be this year, if God forbid, if there is no further impact of COVID, I think we will be setting up investments in Bengal with some big ticket shows. So our endeavor is to take it to the next level.
Okay. Sure, sir. That's helpful. I'll get back into the queue. Yeah, thanks.
Thank you. Participants, to ask a question, please press star, then 1. The next question is from the line of Kishan Tosniwal from DKMS and Associates. Please go ahead.
Good evening. Hello.
Yeah,
we're here.
Yeah. I just wanted to know, is there any change in the dividend policy that we were discussing in the last phone call? Are we changing anything related to it, or is it going to be the same that we had pointed out earlier also?
Yeah, no, we've announced an interim of 75% dividend, which is 3 rupees 75 per share. So we will see that on dividend. We don't think that we're going to change materially from the payout ratios of the past. So as I've told you even in the last call, we've been very generous in paying out. The only year in which the payout ratio fell to 15% was last financial year because of various reasons of caution and conservatism. If you remove FY21 and look at the periods prior to FY20, we've averaged anywhere between 45 to 85% in payout ratios. So we would certainly go back to the trend line, anywhere between 45 to 85%. In many years, we have paid out 65%, 67%. So we will go back to the same thing because we don't like to depress our return on equity ratios. We always had a very high return on equity. It will go back to the way it was. It's only because of the uncertainties that have been brought about by the pandemic that we've exercised a bit of caution. Now slowly things are coming out and we will go back to the generous distribution that we've always applied in the past.
So the percentage of 65 or 45 to 75% what you're talking about is of what, profit, or you are talking about the free cash flow that you generate, 45% of that you are talking about?
Of reported PAT. If you look at the 10 years from FY 2011 to FY 2020, against a total profit of about 9,300 crores, we have paid out about 5,700 crores. And that comes to something like 62% payout ratio. So that's for the entire decade. And if you look at in that year, some years we have given as high as 85%. And some years it has dipped, only 2 years was below 50%. But otherwise, we've been paying out anywhere between 60 to 65%. So we will stick to that. We don't want to put a precise number because business is all about uncertainty. There could be a lot of other requirements also to keep cash ready. So we would like to follow a policy where we are generous, but if situations demand, we also cut back on dividends so that the business is safe and protected.
Oh, thank you.
Thank you. The next question is from the line of Naval from Emkay Global. Please go ahead.
Yeah, thank you for the opportunity. I have a question on Sun Next. As you stated, the 23.5 million subscribers and majority of that coming from telco tie-ups. Now, what kind of deals you have with telcos? Because, if you will not keep putting in money or investment for fresh content, at the time of renewal next year, they will squeeze you out because what is there for subscribers incrementally, the way we are seeing for other OTT players who are investing heavily and giving away a lot of fresh content. So how are you going
we are investing in movies, and every time we premiere a movie on Sun Next, we see a hike in subscribers. It's not like, it's only web series originals that will draw the customer. I know many of my friends who live abroad, they have signed up for Sun Next at something like $10 because they get access to KTV and they get access to my entire film library. So to say that, if anything, Sun Next has got an impressive collection of content. So you get all our channels streaming live, and then you also have access to my entire library. And you can choose a non-linear option on the serials as well. So to say that, there's no content on Sun Next is absolutely facetious.
So there is no such kind of agreement with telcos also which define that you will have to put X number of, hours of fresh content or something of that sort?
No, if anything, we limit the access to my library because, for the kind of price that we get, we don't open up the entire library. We only give restricted access to our library because if they want to get the entire access, I'll be cannibalizing my own customers. So, like many of the deals that we have with the telcos, there is only a restricted access to my library.
Okay. And on international subscription revenue, so is this also the reason why your international subscription is going down, probably subscriber base on OTT?
Exactly. A lot of people are now shifting from the local DTH cable-based subscription directly to Sun Next. See, there's a huge South Indian diaspora that lives in Southeast Asia, places like Malaysia, Singapore, then we have Sri Lanka, and then we have a lot of South Indians living in the Middle East, and some in UK, many in North America. I think the only place where we don't have a South Indian diaspora is probably Latin America. Even in Australia, we have a lot of, in Australia and New Zealand, Japan, we have a lot of subscribers. So there is this opportunity which will play out. And increasingly, because of the pandemic, viewing habits itself is changing. A lot of Indians are now watching Korean movies and Spanish movies, and a lot of North Indians are watching South Indian movies. In fact, I have friends in Bombay who are big fans of actors like Mahesh Babu and Rajnikant and Vijay now, because the pandemic has actually prompted them to look for other options in content. So I'm very positive that Sun Next will become a very important part of our total offering.
Understood. And last question on your international subscription. So what should be the base number now? Because as you rightly stated, there is shift which is happening. So what base number we should now look at and work it forward? Is it 25 crore run rate which is sustainable, or there is still some room for decline over there?
No, the number that you see there is actually from our tie-ups with telcos and other cable distributors and DTH distributors abroad. The Sun Next one comes through the digital revenue. So that is a B2C model, whereas this international revenue number that you're seeing, it's actually something that we earn through a tie-up with a DTH operator abroad who then serves the customer, and we get something like a revenue share. So that arrangement is the one which is slowly shrinking, and people who are churning out of that are opting for Sun Next because they can now start getting content directly from me.
Okay. So the run rate should be in the range of around 100 to 110 crores as of now.
Got it. And one last, if I may, in terms of Sun Next, movie strategy, as you rightly stated, is working well in your favor. So this 23.5 million subscriber number, what number you will look at, whether it is 50 million, 100 million or 150 million, where you will think that this business model is now sustainable, as you had stated in your earlier calls also, that there is still uncertainty around the business model and you don't want to distort your numbers unnecessarily. So what number is in your mind which will lead to aggressive investment, and that will be the inflection point for fresh investments there in terms of subscriber number, what you are looking at?
See, the holy grail for me is if every home in South India becomes a Sun Next subscriber. See, there are 54 million homes in South India. And if each of those homes goes on Sun Next, that will be the absolute moment of arrival for us as a digital powerhouse. But that's some time away because for the simple reason, only 7% of Indian homes, 7% out of 300 million homes are now having high-speed broadband. So it's going to take some time before homes go completely digital, because still India is a developing country. People share one TV and they sit around a TV in the evening and watch as a family. So that is probably going to take some more time. We have not like countries in the West where every home has got high-speed broadband and they decide when to watch and what to watch. So that and also they are very nuclear families, and many of them are single occupant homes. But it's very different in our markets, especially rural South India, where people as a family sit together and watch. So my guess is if we can get to a point where I get even say 20% of the target audience, like out of the 54 million homes, if I'm able to convert 11 million into direct paying subscribers of Sun Next, I think we would have achieved a breakthrough kind of penetration. But it's still some time away, in my opinion.
Okay, and whenever it will happen, if we assume that whatever number of years it take, and there are 54 million or 50 million digital homes subscribing for Sun Next, would your investment on core will go down substantially by them?
No. Investments will only keep going up, because end of the day, unless we invest, we will not have the eyeballs. I mean, today Sun is having a commanding share. I mean, we're basically a South Indian company with one outpost in Calcutta, but with this small slice of the market, which is 5 states. It used to be 4 states, now it's 5 states because of Telangana. We have a disproportionate share of the market because of the high penetration of TV. and the very high impressions that we record week after week. So unless we keep investing in high quality serials, reality shows and movies, we will not be able to grow this number. So content investments is going to be very, very high and elevated for the foreseeable future.
Got it. Thank you so much and all the best.
Thank you.
Thank you. The next question is from the line of Karan Taurani from Elara Capital. Please go ahead.
Hi, thanks for taking my question. My first question is on Sun Next actually. So I said you clearly mentioned that 7% of the households have a broadband connection and the high-speed internet put together. But there's also an analogy here in terms of having this big smartphone base which is there, which is almost about say 400 million smartphones today in the country. And this entire thing of 4 people watching one TV does not hold any kind of relevance now because people at home are watching their own screen. So don't you believe there's an opportunity there to capture this mobile audience? And if you wait for 3, 4, 5 years more for this number of broadband homes to go up, you would have kind of missed the bus that time.
No, sir, I'm sure. I mean, maybe the smartphone universe is even bigger than 400 million. I have absolutely no doubt that people are watching a lot of stuff on mobile phone, but that content is not this kind of content because people are watching short formats. They're using it for watching news. Unless you have nothing else to do, you're a security guard, and then you're looking at your phone all day. Because you have nothing else to do. But otherwise, the serious entertainment buff is not going to watch it on the phone. I mean, imagine watching a movie like Jurassic Park on a mobile phone as opposed to a 65-inch TV. So we're talking two different things. So if it's a movie, people would like to watch it on a big screen. And if it's something like an IPL scorecard, which you want to watch before you board a flight, that's sometime, you need to get to inform yourself on what's happening. So that's the way we are looking at it. And you're absolutely right. A lot of people are having smartphones, and that's a huge market that we need to tap. But there's only so much that one can do at one point in time. And I don't believe that, we will miss the bus because the moment you start investing in fresh content, everybody is going to divert their attention to you. Because high quality content will draw the eyeballs. To say that, because I'm not investing today, I will not be able to catch the eyeballs 2 years from now is absolutely untenable.
Right. So two things there. One is, of course, there will be players here who will have a first mover advantage and customer transitioning from one app to the other may not be that easy. You'll have to spend probably 2x or 3x of what the existing players are doing today. And secondly, I think apart from movies, I think, binge watching, web series, TV shows, catch up, all these trends are very much, playing out on the mobile right now. And I think that is the way to, go ahead. So that's on the digital part. Second question was clearly, on this entire TV proposition. So, of course, you've started a lot of non-fiction content. You have plans to launch more shows in coming weeks and months. But non-fiction, as a segment is something that you've tried in the past as well. Now, this time around, what is the confidence that, one should go ahead with? I mean, how different is the strategy, for non-fiction content specifically for Sun TV? And how confident are you of getting that big success and, I see competing hard with, Star Wix?
This time, we are not trying any homegrown non-fiction content. We are tying up with some international format owners and launching really larger than life shows. So I am seeing that based on the response we got after the launch of the MasterChef, the first week has been tremendous. And also you should keep in mind the overall profile of the viewer is also changing constantly. There has been an overweight on the profile of people like between the age group of 20 to 45. And so that way, I think we need to balance our content strategy, which is appealing to multiple age groups. So typically, I think this large format non-fiction shows will try to bring in younger audience into the channel, which will overall facilitate us to improve our GRPs and our market share. So that way, I think these are more of a strategies which will create some disruption and impact in the respective markets. And we are, aligning with really, top movie stars and also some formats which have actually worked. And to a great extent, we are also making it interactive. Like KBC, we have Junior NTR, who is one of the top guys in the Telugu market. And as a format, it's a very successful format across India. And the third element, which is actually making it successful, is also interactive. Like people can sit at home and play the game. So that's the differentiation as compared to what it was in the past. So I think we are very hopeful based on the initial responses what we are getting, that it will actually create some impact and it will enable us to gain some share.
Right. And what is the time gestation here in terms of gaining viewership share in Tamil for something like Sun TV?
So see, like I said, like we have already launched this show, so we are also looking at some other formats. Parallelly, we are also sort of trying to improvise our basic thing, which is fiction, on the strength of the non-fiction shows. So that way, I think we are hopeful that in the next couple of months we should see some good traction in the numbers.
Right. So you can say arguably that way that because of these shows coming in and because of viewership share going up and then that impacting advertising possibly positively, S2 could be in line with industry or probably outperforming industry average ad growth. Is that expected?
Yeah, definitely. See, the one thing is, though there is a cost, but in terms of revenue, this show also gives us disproportionate revenue. Maybe not completely based on the GRP numbers, and it is not being sold as a commodity, but it is more sold like based on perception and the show. That way, I think it will enable us to sort of give us incremental revenue. And I think we are not looking at 1 quarter or 1 month or 1 year. It's like as a media network, we are also wanting to lock some properties for us, which is there for 3-5 years, which will come on multiple seasons. So that way, it is a strategic call. And I think I must tell you one more thing: this MasterChef also evokes so much of response among the Sun Next viewers, and we saw huge downloads which are happening. That way, this is a strategy which is a combination of television where we are able to bring in new age group, and also to a great extent it will facilitate our digital strategy. So it is a combined strategy which is we should keep in mind, and so that's how I think we are bringing all these international formats into this market.
Great. Thank you so much. That's it from my side.
Yeah. Thank you. The next question is from the line of Abhishek Bhandari from Macquarie. Please go ahead.
Yeah, good evening, sir. Thank you for the answers, especially on the dividend. That was my first question. So my second question is basically, you mentioned that there's a trend of people shifting from TV to now online ways of watching content. But so do you think it will probably hurt our ad revenues maybe till the time we are able to monetize those users in the OTT platform? And because you mentioned that the OTT business is likely to be more like subscription-led than ad-led. The reason I'm asking this is if I look at other forms of media, there has been a gradual shift of the ad spending away from traditional like print and all meaningfully towards digital ways, because that's where the eyeballs are moving towards. So your thoughts would be helpful here.
Abhishek, actually you're right, but it's not the complete collapse of this revenue stream, because for the simple reason, as I mentioned, the underbelly of this viewing across India is still television. I mean, if you look at the number of households that have TV and the number of minutes I saw from that FICCI report that something like 235 minutes is the average view time per day. And of course, digital has grown, but it's grown on a very small base from 28 minutes a day to 42 minutes a day. So while TV has grown from 218 to 235 minutes, digital has gone from 28 to 42 minutes. But if you look at the aggregate minutes on a weekly basis, TV is many times, my memory serves me right, something like 900 billion minutes as opposed to 8 billion minutes.
Television is still a very strong medium if you want.
So the point to note here is ad revenues will track eyeballs. I mean, as long as you have this kind of overwhelming statistic, marketing managers will put some monies at least. I mean, I'll be nuts not to, catch this kind of billions of impressions week after week after week.
No way you can miss, like if you want to reach out to 90% of the people in Tamil Nadu, you just can't be without Sun TV. You can't launch a product or have the brand recall established without using that medium. See, even today, digital is not a mass medium. It's still a very niche medium. So I am saying that...
And more importantly, Abhishek, there are many digital formats where people don't want to watch ads. Like Netflix doesn't have any ads. Like I am a great fan of YouTube Premium because I just don't want to see any ads. So I pay 120 rupees a month and you get ad-free content. So there's a very, very niche market, and that is not the market to go after if you want to build a business model that captures ad revenues. So I believe that at least for the foreseeable future, at least for the next 2 to 3 years, there's no way spending on TV ads is going to abate.
Right, sir. Thanks for that, sir. So my third question is, traditionally, you have been, very strong in South India, and you have been able to generate one of the highest penetration and disproportionate market share. But, traditionally we have seen that, the success, what one replicates in a particular area could be replicated, in other geographies. We haven't seen any, diversification of you out of TN so far, maybe broadly South India so far. But do you think there's an opportunity for us, may not be now, but, over a medium term, to explore, newer markets within India itself? And especially, where, the content could be dubbed, or, you could possibly, try out even content in the other languages. Yes, sir. I mean, I would just want to hear your thoughts.
So you're right. In fact, that's the reason why we went to Calcutta and we chose the market very carefully, because we wouldn't have been able to make any dent in Hindi, because it's a very intensely competitive market with 4 major players between Color, Sony, Star and Z. So which is why we went to Bangla. And I thought we did fabulously well in the first year of launch. But unfortunately for us, as we were getting into our stride, I think we went from 0 to 5 or 6% market share in just about 10 or 12 months. And unfortunately for us, the pandemic came and, put a spoke in the wheel, and therefore, we had to scramble around and focus on some of the core markets. But now that, slowly things are coming out of the lockdown in Calcutta, as Mr. Mahesh just mentioned, there is a lot of investments that will get, directed towards Sun Bangla. And similarly, we have a plan to get started on Marathi. And as you know, Pune was in all sorts of lockdown till recently. And Bombay, of course, is still having some lockdowns. So we may have to, delay that launch as well. But you're right, we want to take this. We may not be as dominant as we are in Tamil, because this is a market we understand very well. But I'm sure if we can build a 10 to 15% market share in some of these niche markets, we would have done a reasonably good job.
Right, sir. Thanks. And, one last question with your permission, sir. Hello?
Yeah. Hello?
Yes,
Abhishek.
I think the call dropped.
Mr. Bandari, can you hear us? As there's no response, we take the next question from the line of Yogesh Kirve from B&K Securities. Please go ahead.
Yeah, hi. Thanks a lot for the opportunity. So first of all, how do we assess our performance on the fiction shows in Tamil and Telugu market in the last 3 to 6 months? So that's the first question. And related to that, we see there's a very sharp scale up in our investments in the content spend as far as non-fiction is concerned. So what is we are planning with respect to the fiction programming in terms of spends in the coming year?
So see, that's what the overall strategy is to, create some impact through the non-fiction and get some new audiences and ride on those to also gain traction on the fiction. So if you look at Sun TV per se on a prime time as compared to what it was the previous quarter, we have gained at least 4 to 5% in terms of market share. We are at around 44% now as compared to 39%. So on a lot of time bands where we had witnessed tough competition, we have been able to give a gain market share in Sun, but that's still, we are not happy. It's still work in progress. We are rejigging the whole strategy in FPC, which is a continuous effort, and we are hopeful that we will continue to grow on the fiction space. On Telugu market, we have very strong lineup of launches in the next 2 months, riding on these 2 big ticket shows we are launching there, which is KBC and MasterChef. We have at least 5 to 6 new shows getting launched in the prime time in Telugu. So I think we are working towards a very strong comeback in this market.
So on back of this, the content spend, any guidance regarding what could be the increase in the overall content spend, fiction and non-fiction, excluding movies during the current year?
See, I think currently our run rate is like we spend around 200 crores on content. So there could be anywhere additional 50 to 75 crores additional investment.
Okay. So finally, just a bookkeeping question. So if I got it right, because of the changing the useful life estimate with respect to amortization, so did we say that the amortization was lower by 70 crores during the quarter?
Yes, 70 crores.
Right. So otherwise it would have been something like 77 crores.
Correct.
We mentioned that in the regular
notes to the accounts also.
Sure. And then you said 30%. 30% is for the first year, right? So it would be that would be done
correct.
Nearly.
So 30, 20, 20. That's the amortization.
Yeah, and within the first year, that 30% would be booked equally across months, right?
Correct.
Okay. Fair enough. Thanks a lot for the responses and wish you all the best.
Thank you.
Thank you. The next question is from the line of Kunal Vora from BNP Paribas. Please go ahead.
Yeah, thanks for the opportunity again, sir. Just a follow-up on Sun Next. You talked about investing in Sun Next for a long time now, but the investment keeps getting delayed. Like, despite pandemic, competition is still investing in originals. So have you done any study on how your market share is in television versus OTT? And what is the aspiration? Would it be okay that, like, say, you are a laggard in OTT, like, despite being a leader in the TV broadcasting space, and just to protect profitability, like, you'll be okay with delaying investments in Sun Next? So if you can just share thoughts on why there is been such a large delay when you've been talking about investing 150-200 crore for at least 2 years now.
Yeah, actually, to be very honest with you, we did mention that we would start investing starting October 2019. But unfortunately, we couldn't get started in that quarter. We delayed it by another quarter. And then early March onwards, we had, this thing of the pandemic. So we've lost some time. But I don't think, because of this, we are going to get into any serious permanent disability in terms of our competitive positioning. True that there's a lot of content which is still getting produced by independent OTT labels. A lot of new shows are also coming. But at this point in time, we don't have that ability to also produce OTT alongside our various other, projects which are running concurrently. So we have our bread and butter business of TV, which is an extremely profitable business that needs to be nurtured. And we have seen from time and again, every time we have a movie that's premiered on Sun Next, it drives up subscriptions noticeably. So we want to get these movies off the block because there's only so much one can do in terms of bandwidth. So we have chosen to focus on linear TV and our film projects. And we will, I don't think anyone can today say that we will disregard OTT, because the fact of the matter is the OTT business is actually doing well for us with zero investment in content. If you look at our profit numbers, there's nothing to sneeze at. Because end of the day, what we really want to do is to run a highly profitable company, which is also growing its bottom line, which is what we are doing. At the appropriate time, when the business is stabilized and normalcy is restored, you will see an appreciable increase in investments into pure play web series originals. That's for sure. I'm confirming that now.
But have you done the study on the market share in the OTT space? We have mark numbers on TV space, but on OTT, is there something which you checked? Is there anything which is giving you comfort right now that you are still in the game? Because it looks like
the only number that we have is the numbers that are put out by Z5. Other than that, we don't have any OTT numbers that are public.
On the regional space, we don't have any much of data, so we have very limited data. But to add to what Estelle is saying, basically, strategy for regional markets has to be very different from the national market. So I'm saying we know what works in this market. Predominantly, we are seeing a movie which is driving the content here, like that. For example, if we have some partners whom we have aligned, whom they are paying some minimum guarantee, some of the renewals are coming at 3x of the current value. That's primarily because still there is a huge value to the content we have. And also what the subscribers are demanding through OTT. So that way, I think still, in my view, regional markets have to still evolve and graduate to, get original OTT. So because we have not seen that scale of investment in the regional market as such. But yes, movie has been the huge demand for people to consume through the OTT, which still we have a very strong library.
But you also indicated that the paying subscriber base is not very large. While you have a total of 23 million customers, at the same time, not many are paying you directly. They are all watching it through telcos and mostly for free. While you are getting paid, the fact is that while the consumers value the content, they are not really paying for it right now. And
because anyway, we are reaching the consumer through the telco. So that way, I think we have all the big guys with us who are basically we are supplying content to. So that way.
No, but you're right. If each of these customers were to pay the 50 rupees a month that other people are paying, we will be laughing all the way to the bank. But you're right. Since we are going through an intermediary, the realization is far less than what it might have been. That point we take.
Sure. Just one last question. On the cash balance, what's the cash balance now, and what's the plan to deploy the cash? With the dividend policy which you just mentioned, maybe 60-65%, the cash balance will only keep increasing. So and you haven't made any acquisition in more than a decade now. So aren't you being a little conservative on cash, and why not consider a buyback?
But if you remember, Kunal, in FY 2000, our payout ratio went up to something like 87%. So when we know that, the liquidity in the balance sheet is beyond, foreseeable needs, we will flush it out. Trust me, this is something that we are very, very keen on. We don't want to carry excess liquidity on the balance sheet. And that's the reason why, we've always paid very high payout ratios. I mean, it's
don't
just
you think
that,
you already have excess liquidity, like with almost last quarter around 3,800 crore of cash? Don't you think you already have?
It's slightly more than that now. It's slightly more than that. It's approximating 3,900 crores. But as I said, we are just coming out of a difficult year, and we also had some, dislocations of third wave, and then people are saying some Delta variant and all that. Despite that, we paid out about 3.75 rupees per share, which translates to how much? About 150 crores. Yeah.
Why not consider a buyback? Why not consider a buyback? Any reason why buyback is not in the plans?
See, the board, buyback has to be a big bang buyback. Otherwise, it doesn't make any sense. So on the other hand, paying out a dividend regularly gives a very predictable, visible stream. And that's the reason why the board decided that, we will not do a buyback and we'll give a dividend.
Great. That's it from my side. Thank you, sir. Yeah.
Thank you. Ladies and gentlemen, we'll take the last question from the line of Sunny Gosar from MK Ventures. Please go ahead.
Yeah, thanks for taking my question. I have two questions. First is on the subscription revenue. Can you help us understand why have we lost the growth momentum on the domestic subscription revenue? It has stayed very range bound around that 420 crore quarterly mark. In spite of Sun Next revenue coming in and in spite of digitization happening in the Tamil market. So if you can throw some light on that, that will be helpful.
No, I think primarily there was a couple of agreements which had expired in the last quarter, which we had revisited certain agreements. So that's why you have on a year-on-year drop during June 21 compared to June 20. And I think we are also waiting for the complete clarity on the NTO2. As and when things stabilize, we should have, like Mahesh and SL mentioned earlier, we should be able to have much more clarity on or visibility on what will be the growth for the current fiscal. Maybe I think 1 or 2 quarters down the line, we should be more clear once we have feedback from the Supreme Court.
Right, but have those contracts been renegotiated? And basically, assuming that the matter for NTO remains sub judice, do we expect on this base of say about 415 crores of domestic subscription revenue, do we expect growth to incremental growth to come on this base?
Definitely.
Any numbers in terms of mid-single digit, double digit?
We don't want to say. Let's wait for the outcome of this. We are very confident that we will continue to grow the subscription number, but we want to wait and see which way this whole litigation ends. As Mr. Mahesh just mentioned, we are still, relatively, in a very safe position as regards this possible implications of the NTO 2.0, but we don't want to, rush into any kind of precise forecast. Suffice it to say that subscription revenues should grow this year also, but then we will wait for the order to come, and then we can give greater clarity when we have the call for the second quarter.
Yeah, because at this current Q1 quarterly run rate, if we annualize it, your FY22 subscription numbers, domestic numbers would come to be lower than the last year numbers. So I just wanted to get a view on that.
Come again, please. Can you?
So if we annualize this quarter's subscription number, Q1 subscription number,
It will be lower than last year.
it will be lower than last full year's annualized number. If we annualize this quarter's run rate.
No, I think, but that's what we said. Once the NTO 2 gets firmed up, we'll have much more clarity on how the numbers will pan out over the current fiscal. So give us some time, so we'll have an idea then.
Sure. I have one last question. In terms of the new amortization policy for the movies, so is that policy also applicable for the movies that you produce, or is it only applicable to the satellite rights purchase? How will that work?
Yeah, it's applicable. It's applicable for all the satellite rights of movies which we acquire. So even in the case of our own movies, we have a bifurcation between the theatrical cost and the satellite rights. So even the satellite rights component will go through the same policies.
So basically, the movies that you produce and sell out to the distributor, that the cost that is attributed to the production will be taken as a full charge in the first year itself. Is that right?
Correct. It will get charged as and when the theatrical release happens. In the same movie, there will be a component of the satellite rights which gets bifurcated. So that component will go through the method which we mentioned, 30-30, 20-20.
Sure. And in the light of the new policy, can you give some color in terms of what would be the depreciation and amortization charge for the full year? Or if you could give some color in terms of the total spends on the satellite rights that you have budgeted for this year?
Yeah, I think if we recollect, possibly in the last call for when we did for March, we had indicated about roughly around 200 crores for movie amortization. But I think given the fact that we are now August and the theatrical releases are not happening, possibly we'll scale it down to around 150 crores for the full year. We'll have to see how that could also change if there's any further delay in the theaters getting reopened, maybe by the end of September or later than that. But as of now, we're looking at about 150 crores of amortization at a gross value.
Right, plus the own movies produced, so that will be in addition to this.
Yes, for movies produced, again, based on the theatrical release, we always time it for about 60 to 90 days after the theatrical release only to be allowed to be telecast on the television. So given the fact that we are doing first of our movies sometime in November, and assuming we're able to do at least 2 or 3 between November and say Pongal of next year, January, that number could move into the next fiscal as well. There is a possibility.
Sure. Thanks for the detailed answer.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for closing comments.
Thanks very much. We had a very good call. Have a lovely weekend. Bye.
Thank you.
Thank you, sir.
Thank you.
Ladies and gentlemen, on behalf of Axis Capital Limited, that concludes this conference. We thank you all for joining us, and you may now disconnect your lines.